docu into the end of the day. But GameStop did a little bump. So what do we got? We got you know, we had the little run this morning, and that was in the expected range. Then we started to see some market pressure throughout the midday, and I think that put enough pressure on the CNS that they actually had to get some buy volume plugged in. Today's volume actually a little bit higher, but I don't really know how to weigh in on this in a way that you guys will understand. But essentially, I think that we're seeing a little like a little bit of a cyclical effect on the FTDs here from last Thursday and Friday. Like a feedback loop. So there was so much volume and so much covering last Thursday, Friday, that we actually see a little bit of extra volume today. Does that make sense in a way for you guys? So we had our regular FTDs, but I think we had a little bit of market maker. Okay. I think we had a little bit of extra like market maker volume today from the first day of the FTD covering. So kind of like a tiny feedback loop, and that's why we see volume a little higher today than we had. Like, can I zoom in here real big? So if you look at our volume trend, this was last Thursday. We had that big volume day, and then it falls off, right? And then we see a little kickback here on these 2 days, and it comes up a tiny bit. I think this will largely be done now, and we didn't cross 100 or stay above 100 into close, and so that means those 100 calls still aren't in the money. So that positive hedge that would affect for next week for May OPEX is still not there, and I assume that we're probably going to see some more downside tomorrow. I need to look. I'll have to check it out at the end of the day and see what our dark pool utilization looks like. I'll check out our call skew and try to kind of determine some directionality from there. But right now it kind of looks like more flat at best, maybe a little bit down. Remember, they're still not at a positive hedge because we haven't really crossed up into where the calls are. And so the market maker is really not working on our side at this point. And the market maker at this price is almost at neutral, right? Or actually at neutral. So the market maker is perfectly happy with the price staying exactly where it is right now. Anyway, so I think that's a little bit of what we saw today. I mean, we had some pretty crazy moves on the SPY. Everything ran up through the midday and then died off by the end of the day. So weird, but also probably largely positioning. We have the VIX expiration this week, we have SLD this week, and we have the monthly OPEX this week. And the OPEX outside of GameStop, like across the indexes, is loaded up this week. So it's really possible that we're just seeing a lot of repositioning going on, and everything's going to kind of go back to normal as we move into next week. That's none of those words were crime. All right, let's take a look at our longer term. So here we are, and based on this, it really looks like we've triple topped. I could see us moving back down to 93 tomorrow even, unless we break higher, and that high would be like 108. I don't think we're gonna. I don't think we're really gonna see a lot more upside. Could this break out? Maybe, but it doesn't really follow our trends for OPEX. Like even in November, I think our trend was like we did this and then we still fell off right before November OPEX. They always cover from the lowest period. you know, and in March all the way down there. If we go back, sorry, if we go back to June, or well, this is August, but August actually the lowest part was right before the FTDs, but then it slumped down again. And remember that these are Renko candles, so they ignore time and they compress volume. So these are a little better for like long-term price analysis. Same thing though out here in June. Last May OPEX, we rallied a little bit for those FTDs, and ultimately they dropped us down. They do it every time. This is really common throughout every one of the cycles. So little rally, drop into the run, little rally, drop into the run, and this one ran twice because we had the November 3rd and November 22nd, because remember they covered the ETF, more ETF FTDs, because the BBBY buyback. Here's March, same deal, dropped us down hard before running it. And this looks the same. Like we're gonna have this little rally, they're gonna slam the price, and then we'll run in June. And so that's what I'm looking for. I'm not saying they couldn't run it a little harder, or maybe clear some of these obligations, given that they still are carrying that fat borrow rate, right? They're still sitting on 8%. Foundation, thank you so much, man. I appreciate that. They're still sitting on that fat like 8% borrow rate, and that's tricky because the growth of this borrow rate is exponential, right? And so last time in January we're sitting on 0.75, right? And we start to see it tick up, and we're like, okay, we're waiting for 10%. That's like our target range. And we see it. We see it hit 27% up here in March, but now we're starting at 5%, right? 5.25, which is 700% higher. Which means that the growth of that borrow rate is going to be significantly higher than the growth of the borrow rate on the first run. So they're kind of compounding that risk and that position by not having cleared out their shorts. And I think that's going to matter a lot going into this run, and it's particularly spicy with the prospect of a share recall. I'm going to clip all of this, don't worry. And that's about it. What date is June OPEX last date? June 17, 22, Carl. Plus any feedback, right? So really, like, and if you look at March too, these feedback loops aren't that uncommon, I don't think. And if we look at March, we see the OPEX covering occur, and then we see like feedback from that covering, as the FTDs generated by the initial covering are continue to be offset. And so we ended up running all the way out until like March 31st, like 3:31, and then this was that after hours covering from the announcement. License to bill, thank you so much, man. So we're really looking for this run, right? And then everything after that is kind of just feedback because of the initial volatility. And then that drives FOMO, and then people pile in, so we have like a tiny recovery, and then we keep running. No, Renko blocks are not optimal for drawing support resistance lines. Do not use them. They will be wildly inaccurate. Really far off because of the way they compress price and volume to fill a block. Sounds like you made that up. I didn't. Thank you guys so much. Have a great night. I'll see you bright and early tomorrow morning.